Greetings, everybody. This is Jeff Scott. This is it's almost March 12th. It's about 10:40 on March 11th, but we'll call it Sunday, March 12th, 2017. This is my weekend review. No pun intended. The apropos of spring forward or fall back, I think, falls not just to my clocks tonight as part of daylight savings time, but also to this market, because we really are at a point where either of those outcomes would not surprise me, and perhaps this week we'll have both of them. As always, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I am a doctor, not a broker. I am not registered to do any investment advice, so anything I do here should not be taken as such. I am independent. I've paid for all the tools that I use, and keep in mind, for all of us, trading involves risks, and you alone are solely responsible for any investment decisions you make. I'm responsible for my account, and you are responsible for your account. Again, any decisions you make are your responsibility and yours alone. If I talk about options, I would not use options unless you're familiar how to trade options, and I refer you to the Options Industry Council, affectionately known as the OIC, for their very informative pamphlets and information. Briefly, a lot of people ask me what's my style of trading. Well, I kind of started as a can-slim trader with O'Neill, improved by Morales and Catcher, even more so by Ian Woodward and Ron Brown, and using www.highgrowthstock.com software as a tool that allows me to duplicate a lot of the work that's done within CanSlim and their sites, which are copyrighted, so I don't need to name them. I found that CanSlim was great, and then Morales and Catcher's pocket pivots, Bible gap ups got me in even earlier, but I didn't find that CanSlim was enough to help me learn how to be a trader. When to buy, when to sell, position size, money management, how do I take to the next level? And then I found John Person. I've been a student of his for probably a decade. I think I was one of the first people to buy a lifetime package of his software. He's an author, software developer, trader, got his basic training on the option floor, the CBOE in Chicago, or predecessors thereof, and he's also become a great friend over time. And then Van Tharp is, to me, the guru of position size and money management, and that's my buddy George Lee. A comment about George. George and I will be speaking in Orange County the end of March for a 3-day meeting. If you have interest, just email me, and I'll forward your email to Greg Mills. I know that as of earlier today, there were some spots available. I've decided not to do a separate HGSI meeting. If there is interest and I get enough people asking for it, since the Saturday session doesn't start until the afternoon, I will consider a Saturday morning, but right now I'm not going to pursue that. In addition, in May, I'll be at John Person's seminar in Las Vegas. What I need on my desert isle, I have a lot of different programs, but I need TradeStation or Thinkorswim. I need something for analysis. I find nothing beats HGSI and EdgeRater. I like seasonality, and there's a number of ways to measure that, including EdgeRater, and there's a number of websites that I use. Again, I have no financial relationship with any of these companies. People often ask, why do I do support for highgrowthstock.com? Why do I talk about other people's products when I get nothing? And the answer is simple. I make a lot of money because of these products, and I like others to get exposed to them as well. Plus, the selfish reason is, I do call from time to time and ask for specific indicators to be added, and I do get to the front of the line, although they add them for anybody. So that's my only relationship. If you go to the website, you'll see free 30-day trial. They don't even ask for a credit card, and everything I demonstrate is included in the program, from at least on the HGSI tools. If you go under investing strategies, you'll see my name and Ron Brown and others. Both Ron and I have hundreds of videos. Ron also has taken a liking and interest in VSA, and we'll show you how you can use it for volume spread analysis. I live more by the things I learned from Ian and added to from John Person, etc. Where are we? Gosh, I feel like a broken record. I mean, last week certainly felt like we were going to roll over, and then the employment number came. We finished the week on a high note, and I can tell you that I was pretty flat on the week. The S&P and the HGS 100, IBD 50 were all down a little bit, but it was a rather flat week. But it was a flat week of big hills and deep valleys, and it ended up kind of where we started. It's interesting with that kind of volatility that the VIX continues to stay low. It feels like we're still there. Well, I'll show you some charts that suggest that we could at least start the week on a high note, but wait and see what the future shows Sunday night. This is a dangerous market. Again, I'll point that out as well. Because of my concern that the market is near a top and could roll over, I am not going all in. I'm raising cash, smaller positions. I am selling premium, and I'm starting to look at various strategies that can pad my portfolio performance without giving me a lot of risk. Now, you look at the marketplace on Friday, and what you have here are some sector ETFs, market ETFs. Then you have some of the major sectors, and then you finish with the NASDAQ 100 and the S&P 100. So it's easy, more green than red. Simple, that's all I can say. Because if you look across the different markets, home builders were all green, REITs were pretty much red, social media was mixed, biotech was mixed. Most things were mixed to the bullish side. If we look at how the week ended, if we look at, and I had to go to ETFs because for whatever reason, tonight Thinkorswim was not giving us Russell futures and US dollar futures. So this is the spiders, this is the Qs, then the diamonds, all about the same pattern, straight up, sideways to the 17-day moving average and a bounce off of it on Friday. Bounce off of a moving average, perhaps we go and we threaten the prior highs. Russell looks different. It's now below the 50-day moving average and sort of didn't get above it on Friday. The VIX remains low, and as you could see here, the dollar failed and is heading back down, is now in between the 17 and the 50. If I just take the same and look at the weekly, you can start to see we really are in good shape with sort of a small weekly change on the top three. But the Russell had a bad week and actually is in a PPS sell signal. VIX is down and dollar is sort of in no man's land. Is it going to go higher or is it going to drop? You would think with the Fed rate increase almost assured for Friday that the dollar will be going straight up. But the interesting thing is, and this is, Janet has got to be thrilled, the employment numbers support raising rates, while at the same time the Europeans are talking about potentially raising rates even before their quantitative easing ends. So if the rest of the world, especially Europe, is strengthening, then raising our rates may not make our dollars go up so high that it makes our goods unaffordable overseas. And if you paid any attention to the Trump tweets, Trump wants a weak dollar. So be interesting to see what happens to the dollar this week. And just for the sake of comparison, this are the futures, E-minis. So the top row are daily, then weekly, then monthly. We start with the E-minis, then the NQs, the TFs, the NYSE, and the Dow. So which set is unlike the others? And clearly you can see the Russell daily, weekly, or weak. NYSE is sort of midway weak. The other three look strong. And again, I do think we're at a risky part of the market. Will the big stocks pull the little stocks out of its doldrums and drive them higher, perhaps in the beginning of the week? Or will the small stocks pull the market down with it? Why would you be concerned? Well, rates are starting to rise. You can see on both the 10-year and the 30-year we're peaking up. We had a big week, and we're getting to this year's highs. I've seen some people say that 260 is a dangerous area, and we're not far from there right now. Now, if you look at the AD line, so the white would be the AD line, the yellow's the spiders. And you notice that on the small stocks, AD lines have rolled over. So the small stocks clearly are having reducing breadth, and they're weakening. The large stocks continue to set higher highs. More evidence of weakening breadth, stocks above the 200-day and stocks above the 40-day both dropped, not at reversal levels, but certainly far from overbought. 3-month new high, new low actually did pull down and did reverse. And this is one of my favorite indicators because whenever I get up to the top, like clockwork, the market turns down or at least goes sideways. When I get near the bottom, we bounce. So was Friday the beginning of something new? My concern is we're bouncing from a 17-day, not a 50-day SMA. And I just wonder if this bounce is going to do more than just a couple days. Daily McClellan, we got down to the lowest low in many months on Friday or Thursday, and then the market reversed on Friday. This is the daily. Notice both the daily and the weekly, the oscillators and summation indexes continued below the zero line. But except for the one I showed you, have not reached a level where reversal was obvious. The buckets, again, showing the bearishness of the current market despite higher highs, or not higher highs, but, well, being close to the highs. We've certainly come down over the last 5 to 8 days. 63% of the stocks in S&P 1500, this is redone from a list today, are trading below the midline, which is bearish. And you notice that the more stocks, higher numbers are below the midline, and that we've got 9% are underneath the Bollinger Band. I would expect to see that get a lot further to the left with more stocks before we have an obvious reversal. But again, I'll show you some evidence that says we might go up for a couple days. Now, this used to say HINDY free zone. We still haven't had a HINDY, but let me show you how close we came. So I put some lines through the free. On the left is the NYSE, on the right is the R3000. You'll notice red threes here, that we've had 5 or 6 days on the NYSE, and as a secondary signal, I look at on the R3000, Russell 3000, which is a non-tested. I just do that as comparator. And you'll notice that we've got 3 out of the 4. If I hit a 4 there, I would have a HINDY. If I break down, I see that the only reason we didn't throw a HINDY on Friday was we were short 5 or 6 new lows to get above 2.1%. The reason we didn't get a HINDY on Thursday is we were short new highs. So it's a very interesting pattern, very close to Hindenburg's. I have no idea what a close Hindenburg means versus a real Hindenburg, but I do know that if we start to see a series of HINDYs, that we're getting to a point where one might expect a market correction. So this has got me on edge, but certainly is not classic. Market tone did turn down. You notice we have on the Russell, NASDAQ, and the NYSE, we've gone to red. On the Woody indicator, I'm looking at the third series down. Best case is we're going into chop. Clearly, it's different than it was 5-10 days ago when it was all green. In fact, if we look at individual sectors, we'll find that materials have joined energy in weakness. And there's a little bit of strength, healthcare and utilities. Healthcare and semis, frankly, the only things holding this market up. Canaries in the coal mine, interesting despite what you might perceive as a lot of negative comments the last couple of slides. This is a surprise to me that if I look at the big guys of the market, they're primed to go higher. They did trade up but closed lower on the day Friday, even though it closed up on the day. Therefore, it's a red candle. But a mobile breakout from a squeeze, a PSAR reversal, and a pocket pivot. If these go higher, it probably pulls the market. Again, I think we could see a couple days the market pull north, but I'm concerned over the intermediate and longer term. Know your news and earnings dates. The big winner is going to be Wednesday at 2 p.m., Fed announcement, and then Janet's conference, and that's going to be market moving. Perhaps we don't see much. Maybe we see a little run up on Monday and Tuesday. But I do think that there's risk on Wednesday, if not the whole week. Just a couple of the earnings that will be coming out this week. And, my little comment below, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. There are programs that you can purchase in Thinkorswim that give you a list of earning dates. There's free programs on the Thinkorswim, the TradeStation forum from a person called the Guru that can give you the same information on TradeStation. You got to know your earnings. Market thoughts. Well, all eyes are on Janet on Wednesday. Rate rise, yes or no? Yes is baked in. How many additional rate increases? Is it going to be a total of 2 this year, 3, 4, or more? And I think the market's clearly got at least 2 more baked in. I'm not sure they have a third. If she hints to a 3rd or 4th rate increase, expect the market to sell off. I will tell you, last year they had projected 3 and they did 1. How big of an increase? Boy, if the economy is that strong and the government's going to put some infusion of some stimulus, maybe they go 50 basis points. Highly doubt it, but if they do, that might sink the market. As I said before, the Russell's the weakest, but other industries are in a general pullback to the 17-day SMA, and they do look primed to bounce early in the week. I think the risk is significantly higher than prior bounces, so be careful with position sizes and portfolio risk. And probably, wrong word, certainly not an all-in moment. Strength persists in biotech, specialty pharma, and semis, while overall breadth contracts. One might expect financials and insurers to rally if rates are increased. Now, we balance my tepid comments with the fact that this is a seasonal, strong period for the market. Yet a correction can occur anytime, and this market is feeling and has been feeling heavy for some time. And again, a Fed surprise of 50 basis points, forecasting more hikes, a Trump tweet can sink this market, so risk has to be elevated despite a sleeping VIX. Usual agenda, my top-down approach, so let's take a look at what we can do. So first thing I like to do is open up my TradeStation, and I wanted to show you this first. And with all due respect to other interpretations, this is the COT. And the way that I look at the COT, Commitment of Traders Report, is how I learned from studying John Person. There are others that look at it differently. We're specifically looking here. In yellow, you have the small speculators, like us. The number of future contracts net positive above or negative below. In blue, you have the professional speculators, hedge funds, banks. And in red, you have commercials. A commercial would be somebody taking the opposite side of a long position or something that impacts them to the long side. They may take the opposite side to mitigate risk. So, for example, if I was concerned that the dollar was going to drop and I needed a strong dollar to buy my goods from overseas, I might buy puts in the dollar so that if the dollar stays heavy, I do fine. But if the dollar drops, my price is protected. So then I would be long. I would be long a option contract for puts on the dollar. If I owned farms and I was concerned that the price of fertilizer was going to go up, I might buy a call at a certain price, and if the price of fertilizer goes up, then I would have the ability to buy the fertilizer at a previously agreed to price. It's sort of like I'm buying an option to buy my house. Even if the cost of housing goes up, I can still get it at the house we agreed to. So, the more longs, underneath the more shorts. So you look at the market falling in 7, 8, and 9, and we, the individual small speculators, were long, while the big speculators, the hedge funds, were short. Then we get down to a market bottom, and all of a sudden, the large specs are longer, and we go short, and we stay short for the first 2 years or year and a half of the recovery. So the smart money is the blue money. The dumb money is us, the yellow money. I ignore the red. So let's take a look at where we are today. As you can see, compared to the past, muted on both sides, but the professionals are clearly net positive and have become increasingly net positive over the last couple of weeks. Perhaps they feel the market might go higher. I don't think it's a dramatic number. If I saw something like this to the upside or that to the downside, I'd be much more convinced. Take a look very quickly at the majors. E-minis. Now I look at 5 things. Number 1, is it a person sell or buy? So the E-minis are in a daily person sell. They are in a weekly buy and a monthly buy. The next I look at is the color of the paint bar. This is the Alexander Elder Impulse Indicator. I know if it's green, it's okay to go buy, initiate new longs or holds. If it's red, it's okay to indicate shorts or hold. And if it's blue, then there's no signal, and I could be long or short or hold. So we're blue, and we're green. So clearly not bad, but a little, neutral probably would be the best. Third thing I look for are these little red dots. You notice what happens after you get red dots, the market sells off. Those are a hint of divergence. And as you could see, the MACD was getting lower despite the highs getting higher. We've got MACD divergence now showing up on the weekly, so that's a potential negative. The fourth thing I look at is, am I above or below the Elder auto envelope, and recognizing that it can track up it for a long time, but if it sticks ahead above or below, it has a tendency to come back quickly, and we are in the middle now. Then I look down here at the high jump, and we've come down considerably. We're at 78%. So, looked like Friday was actually an up day. We get above that red line, maybe we'll stimulate a green signal and maybe a buy. I'm not too worried about this picture. I think it can go either way, certainly can go up, but right now it's got a sell signal. If I look at the Dow, also in a daily sell, weekly and monthly buy, blue, and green looks the same. MACD divergence worked off, but MACD divergence on the weekly, it's within the auto envelope, although it's getting pretty high up on the auto envelope on the weekly, and it's come down to 78%. All right. The NASDAQ. Unlike the others, the NASDAQ remains in this is the NASDAQ 100, mind you, not the full NASDAQ, in a buy, green, blue, and green. So the NASDAQ clearly looks stronger. MACD divergence all over the weeklies. Top part, but certainly within the envelope on the daily, outside the envelope on the weeklies, which is concerning. The bongo down here, which we're not talking about right now, went daily is negative, but is a sell, but the weekly's still strong. We're at 88% on the high jump. It's been higher, but certainly the NASDAQ is the strongest of the three. And the weakest of the three clearly is the Russell, where you've got daily and weekly sell, daily and weekly red, blue and a monthly buy. MACD divergence is better now that we came down. We're at only 37% at the high jump. A doji bar here. So those that follow John know that if we can get a daily bar closing above the height of that bar, that would be a high close doji and would be a potential reversal signal. So I look at these. None of them are so stretched that they have to go down further, but they all can go down further. And again, I think getting a bounce early in the week is possible, but I am very nervous going into Janet's discussions. If we look at the dollar, The dollar has a new sell signal and a red on the daily. It's in a weekly and a monthly buy. It's midline on the high jump. So the dollar is weakening. Let's see, I thought we had the VIX here. Let's see. If we look at the VIX. You notice that the VIX had a buy signal on Thursday, which is contrary to the market, but it went to red on Friday, so I'd say the VIX is neutral. And yellow metal, gold, coming down pretty hard, probably consistent with the prior move up on the dollar. If the dollar weakens, then perhaps the metals will pick up. So I look at that and I don't see a whole lot to like, although it does look like the larger stock indexes are getting ready to turn around. Very quickly on the sectors, healthcare in a long-term buy signal going back to the end of January, 92% on the high jump. Everything looks great, but it's getting stretched. Financials, a new sell, but really sideways here in blue. I think financials are going to be the ones that win if we get a hike. Put the FAS on so you can see a little difference. And the FAS actually has now got red and a sell signal down to 70% there, still weekly and monthly. So financials, we'll see if they can get a rate increase. Discretionary in a sell, but green looks like it's going back up. Technology remains strong. I said semis were leading last week. They still are this week. Industrials selling off. Staples, a new buy signal. So if the market gets weak, you might expect people to run to staples and utilities. Materials selling off. Utilities, probably new buy signal. Not yet. All right, waiting for a buy signal. Energy has been weak. And that's that. So looking at that, again, it's pretty clear healthcare and technology is where it's at. Now, let's go into HGSI and do some top-down analysis. See if we can't find something that's worth buying. So, let's go into Woodward Brown user groups, Major Markets Plus, and let's go to top-down view, which is just price and volume, heavily weighted to 1 day. Raw combo, so the strength, biotech, and semis. Boy, I said this last week. I also told you to look at certain stocks that were going to be potentially acquired. One of them had a big run last week. We'll show you insight. So NASDAQ 100 leading, lagging, gold, gas, bonds, commodities, silver, small caps, and dollars. Interesting to see commodities and the dollar on the downside. I point out the dollar turned weak at the end of the week. Commodities were weak for the whole week. Let's look at some of these real quickly. Congrats to Duke fans. Looks like you just won a game. So let's just go into the cleaner view. So at the top, we've got my bongos. The weekly bongo, which is the top, is a very good, slow, but will catch you in late and get you out before you get hurt, buy sell indicator. Notice, had you taken the weekly bongo buy, you would have been in since the market was about, that closing date was 2164, which is 216 points ago. It's still in a buy. That's very meaningful to me. The short-term one goes red in the setting of a pullback. We're clearly in a pullback. There is no Hindenburg here, so we're not going to mention them the rest of the time. We have a 17-day exponential, an 8-day exponential in the magenta, then 1750 and 200. The easy buy is this one when it pulls back to the 50 and does a candlestick like this. The easy buy here, not to the 200, not to the 50, but to the 200. This was an easy buy signal. Okay, a pullback to the 17-day also appears to be a time to buy, but in my experience, it's a little bit more risky. So we've pulled back to the 17. We've had a couple of dojis. A close above that doji would be a high close doji. I think this market can go higher. That weekly bongo is something I'll be watching closely, but I'm not going to make a trade and buy without seeing a move. And I'm going to be very careful because we've got Fed raising rates for sure on Wednesday, and they could surprise with a bigger raise than expected. This market is not without risk. Therefore, be careful. Dow Jones looks exactly the same way. And again, the easy buy signals, breaking through the 50 is an easier buy signal. But sitting on the 17, any momentum coming in here, a buy signal. A break below, then you expect it to go visit the 50. If I look at the NASDAQ, it's probably going to look stronger, and it looks pretty darn strong. But pull back to the 17. Again, all these are in a weekly bongo green. The Russell, well, we know that's the weaker. The Russell had a nice day on Friday, but still an inside day. Notice a significant difference here. The Russell's got a weekly bongo sell. That's bothersome, and I know how it's calculated. Let me just put the weekly on. It can get, if it gets back above this prior high here, that can't be the end, is it? Yeah, it's, oh, this is weekly. It's going to have to get back by this high 2 weeks ago to revert, but right now that weekly bongo is concerning. I might want to look at the dollar. We've already talked a little bit about it. You notice how the dollar, that's a daily, has been in a weekly bongo. It tried to break out. It's fallen back here to the 50. If this dollar breaks below the 50, that may be good for stocks. It will certainly be good for those that sell products overseas. It will also be good for some metals. So gold, dollar firmed on Friday, or fell on Friday, gold firmed. Notice gold's now in a weekly bongo sell signal. And silver, also in a weekly bongo sell signal. I'd be very careful with these metals, although they're going to respond probably to the dollar more than anything else. And if we go look at the VIX, despite my concerns, the VIX is low. It's higher than it was down here, but it's still relatively low. And you notice on a weekly perspective, the weekly bongo of the VIX remains in a convincing downtrend. So you look at this, and what do you feel? I really have to go back here and really emphasize this market can go either way. I think it has a chance of going up, but I'm concerned about Wednesday. So I am going to be very careful at the end of the day, Tuesday, on what's sitting in my portfolio. Not to say I'm going to empty it out. I'm just going to raise some cash and take some smaller positions. Just to show you what good looks like, these two will look different than the rest. NASDAQ Biotech, the IBB, look at that bar on Friday. Started off, traded down, and traded back at where it opened for a doji. This is the prior highs. It's close. We'll see if it can get there. Obviously, if I go back in time, you had highs that were much higher. Let's look at a weekly. But we're about to break out from here, and then perhaps my next stop might be 350. But let's see if that's going to happen. I am long LABU, which is a 3x of this. Notice that we have a green weekly bongo. So it'll be interesting to see what happens there. Certainly looks stronger than the indices, which are sitting on their 17-day. And if I look at the semiconductors, again, that looks a lot stronger. And if you in AVGO like I am, or Skyworks, Applied Materials, then you're enjoying this run as well. So there are certainly some things that look better than others. You want to see what looks ugly. Well, how about oil? Oil, which, let's see if I can get what I want. That's not what I want. Here's a double short on oil. Look how this moved off of its bottom. So it'd be interesting to see what happens with oil when the ultra shorts get a weekly bongo that's green. That's probably not good for the market, at least for the oil market. Might be good for airlines. So that's the market, a market I think that has tons of risk, and therefore I'm being careful. Now if I look here at industry groups, and let's go into, where are they? Hello, they're supposed to be sitting in here. Oh, I gotta take that filter off. Dummy, dummy, dummy. Go down to no filter. Go down to 7. Now hit that. And go down to top down. And there we are. We've got 172 industry groups. And if I want to look what's moving to the upside, I've got 60 groups with a 2-day force to the upside. To the downside, I've got only 2. So at least as we ended the week last week, we had a strong close. Let's see what's moving. Big shocker, semiconductors, biotech, specialty pharmacy, banks, airlines, semiconductor manufacturing, large pharma. Let's take a look very quickly. I don't want to have a very long program tonight. Just show you what good looks like. AMD, never my favorite since I'm an Intel boy, but AMD's been in a nice uptrend. That's in the daily. Sitting right on the 17. It's still in a weekly bongo. Be nice to see a little bit of momentum come in, but that stock looks like it wants to go higher. Here's a stock that did nothing and then had a big move up here. Let's get into my other view. Had a big move up here back in almost a year ago, and has had a major move since. That day had 142 million shares traded, and then you got days of 10, 20, 7, 10, 20, 22. So a big volume breakout day changed the character of this, and that's one of the things that I look for when I scan for stocks, so-called rocket stocks. Here's Broadcom in a great move. You want to buy this when it pulls back to the 50 or the 200. You probably don't want to be initiating a lot of new long positions here, except it's probably going higher. Qualcomm, I like to see it get above the 200 before I went long, but it's traded up off after it's pulled back. NVIDIA, is it done going down, or is it going to test the 200? I'd like to see it show me, answer that for me. One of the big leaders, a double top, a sell-off. I'm not sure it's done going down. Texas Instruments, what a nice lower left, upper right. Looks like it's breaking out to new highs. Marvell Tech, another one breaking out, not quite to new highs yet, but a pocket pivot, a kahuna, mobile breakout from a squeeze. It makes money, much more than its multiple, and this is one that I'm looking at if the market shows any strength on Monday. Intel pulled back, and Skyworks is another one that you gotta like. Not as pretty here, but if you go back since its Bible gap up, nice move up here, right about 100. It's certainly going to go there. Will that be resistance? So semiconductors look good to start. And then my favorite, biotech. So last week I told you to look at a couple of different stocks that might be takeover candidates. One of them, which I mentioned, was Insight. We'll see if anything happens before Monday, but there's a lot of chatter that Gilead is going to make a play. And this is one that I'm long in, and it was a great day on Friday and sort of saved my portfolio. Insight is a company that has a currently marketed drug for a relatively rare problem, but it also has the next generation immuno-oncology drug that's now in combination with the PD-1 drugs, which are the hot drugs from Merck and Pfizer, AstraZeneca, and Roche Genentech. Gilead is sitting on a ton of cash. He's getting a lot of pressure from Wall Street to make an acquisition, and a report did come out this past week that Incyte might be the takeover candidate. I ignore stock price and I look at the market cap. So it's got a 28 billion market cap. So it's going to probably cost 35 or 40 billion to buy this company, which means the stock can still go up to 160, 170. I am long it. I like to buy stocks in uptrends when they pull back to 50. And I'd have to go back and look if that's when I bought it. But this would have been the opportune time. And why? Let me show you what I'm talking about. You notice we broke above the 50 here. Okay. You notice we had a PSAR reversal here. You notice the squeeze was occurring here with the yellow. We had a mobile breakout. We're in a weekly bongo was green. And we had a couple of kahunas right in a row. So everything showed tons of momentum coming into the stock off of the 50. And we had a Eureka, which is a follow-through day in the market. So that's the time to buy. Let's go right here. You had a mobile breakout from a squeeze. You had a kahuna in a squeeze. You had another buy opportunity, which would have got you in this day. Here you had a buyable gap up, perhaps a more riskier buy. It went sideways for a while, and then you had another gap up. This was the time to buy the stock. You could have also been buying it down here when it pulled back to the 50 as well. Here, you're chasing a stock that's a story. It's not being priced on fundamentals. I don't think I would chase it from here. Amgen breaking out to highs. If Amgen, so this is it? It's at all-time closing highs? Well, no, I can't say that. Let's go to monthly. It's at all-time closing highs. So Amgen is at an all-time closing high on a monthly high. Well, I can't say that either because it only goes back to 2005. Well, it's at a 20-year, a 22-year closing high in this market. That's got to say good things for biotechs. If Amgen, and I'm going to show you that if I see it, that Celgene looks the same. Kite, here is a stock that had a kahuna, a mobile breakout from a squeeze, in a weekly bongo. The next day it had a Bible gap up, and it's moved up 16 points or 20% since that Bible gap up. Kite is strong. I'm not sure you want to chase it. It has a new drug called a new class of drugs, and they'll be first to market. Immunomedics is about litigation with Seattle Genetics. Now, Clovis, I think, looks interesting here. Clovis has a new drug approved for ovarian cancer. Notice the price. 2.8 billion market cap. This drug is pennies. This company's pennies. If I'm Gilead, I can buy this for 1/20th or 1/15th of what it's going to cost me to buy Incyte. I think Incyte is transformative, but I think Clovis is also an acquisition candidate. Is it Sanofi, who's also been mentioned in the rumor for Incyte? Does somebody like Pfizer or BMS want to get into this space? I think Clovis is on the selling block, and it's sitting at a place right under the PSAR dot. Had a pocket pivot this week, a kahuna on Friday, sitting right above the 50. I think that's at a buy point, even if it doesn't get bought out. Blueprint, don't know much about it, broke out to new highs. Again, biotech has been strong. Regeneron is a great company with a portfolio of products, struggling to get above its 200. It's been in a long-term uptrend. It is now green on the weekly bongo. Not yet for me, but this one looks interesting. Let's see if I can find you Celgene. And then I want to go back to BioCryst. All right, let's look at BioCryst. BioCryst is a stock that I picked up right there, breaking above the 50, mobile breakout from a squeeze. I took it despite the fact the weekly bongo was red. OBV looked very strong. And the interesting thing is, this past week, and I think this is the date, it had a secondary offering. And a lot of these stocks, that kills the company, kills the stock. And the stock traded at a multi-year, at a year high, even after the secondary offering. I think that's kind of a interesting thing. Now, Celgene didn't make it here, so I don't know what it did on Friday. But you can see that Celgene, come on, it traded back Friday, but it got up to, we're getting into a triple top land. But Celgene is very strong, running from 99 to 126. Again, saying good things about biotech. And look at the earnings per share growth. So biotech looks strong. Third one down, computer hardware and storage. Just look at the one above the index. Don't know anything about this. Let's see if it's a takeout. That's my guess. Yeah, it's a takeout when it does that, so we don't need to spend attention to that group. Specialty pharma, closely related to biotech. This one I'm just hitting myself. I watched the news come out, I think on Tuesday. I put a buy-in order in the aftermarket hours when it spiked up. I didn't get filled, and then I took it off, and then it came back down through my buy order and went up the rest of the week. They have a new drug approval coming. They had some great data. It will lead to an approval. Look at the volume that came in this week. I missed it. Spanked myself. Can't own all of them, but I should have bought that one. That one I was buying on the story. The story was pretty darn good. Probably still is good. Global Blood Therapies. I don't know anything about this except there's a lot of discussion about this one being taken over. Look at the OBV moving up. Big move up here. And again, see if you see a pattern here. I broke above major moving averages. I had a pocket pivot. I had 3 kahunas. I had a mobile breakout from a squeeze and a weekly bongo green. Enough. I'm not beating you up, but that's what I look for and scan for. Not looking at Valiant. All right. That's a couple of things that look interesting. Precious metals. It's interesting. If gold stabilizes and goes higher, look at American Barracks. It's got earnings per share. It's got growth greater than its multiple. It's sitting down here at a confluence of moving averages, so it's not far from, I'm seeing a squeeze. Not yet. It's all about gold. AEM, not as attractive. The one I thought looked interesting, although it's way down here. Again, I have to get above this area here, but it already looks like it's turning. This is BVN. It's got earnings per share growth. You also have the benefit if the dollar falls compared to other countries, that could propel it higher as well. Wait for the change. Don't anticipate. React early. Big banks. Deutsche Bank. This is one that was on the ropes not long ago. Getting back to the 50 with a bunch of kahunas. I like to see some momentum before I get excited. Wells Fargo, the one that ordered people things they didn't want. Kind of looks like the indices pulled back to the 17, waiting to see what Jumpin' Janet does. Citigroup looks the same. I have my position is in Bank of America. I think that Bank of America and JP Morgan's charts look very similar. You're going sideways, waiting on the Fed. Here's Bank of America. Nothing really matters to me here. If interest rates go up, this is going higher. If interest rates don't go up, it's still going higher. I love Bank of America. It's got great earnings per share growth. You reduce regulations, this stock goes much higher. And JP Morgan, certainly the leader of the pack, looks the same as Bank of America. So might be a play on the rates. Airlines, I thought these guys were dead. And then all of a sudden, we have fuel dropping and they're going back up. JetBlue, I don't know what people like about that airline. Seats were skinny. They don't give you any food. The one I flew a couple weeks ago, the pilot comes on after we sit down and announces that only 1 out of 3 toilets work. Thank God I was sitting by the one that was working. Not fun. I don't think I'll ever fly on them again. But it's sitting down here coming off a base. It had a pocket pivot at Kahuna coming out of the squeeze. It doesn't do a whole lot for me. Delta, I have a position here, mostly because I fly it all the time. It's been languishing. They came out with some bad numbers and sold off. But let's see if it can turn it around. This one probably had the best chart, which is Alaska Air. And if you go over my buy signals, it's sitting on the 50. Weekly bond goes a buy. It had a Kahuna. I would set a buy price a little bit above it. You could even look up here and set it at the PSAR dot. If it takes that out, you want to go long. But if it doesn't, you'll be glad you didn't. Infrastructure software. This is kind of funny. Talk about bottom fishing. You can buy it. I'm not buying this. I mean, is this the done? Is it done going down? Well, it's kind of where it's fallen in the past. And it's a darling on Wall Street. It doesn't really make a whole lot of money. It's expensive. It's probably one of the leaders in the security world. These are bingos that will occur after you're thrown out with the bathwater. I'm not ready. I'd like to see it start to move up. But, you know, I'm going to put on a watch list and watch it. Semantic, much prettier. Here's a nice uptrend. Weekly bond goes green. Time to buy would have been here. It looks like it wants to go higher. Microsoft, a growth stock again. So Palo Alto is up there. That must have had massive volume. Let's see. $50-day volume is 2. Let's go back and see what the volume was. It did only double volume, 4.7. So a big volume day, double the average volume. All right. Some specialty retailers. Ulta. Boy, this one I played, actually made money, although I thought I made a big mistake. I did a straddle, which means I sold a call and a put at 275 on this, and then I turned it into an iron condor by buying back a call and a put that was $10 away. So I did, and then I changed my call before earnings from a 275 to an 285. So I had a 285, 295 credit call spread, a 275, 265 credit put spread. As long as the stock stayed between 265 and 285, I would make money. Actually, about 267 and 285, I would make money. In the after hours, it traded down to 260, so it meant I was going to lose money. And then I sold the long call, or the short call, but the 285 call at the open because it was worthless, pocketed some profits there. And then the stock turned around and I ended up selling the short put for pennies. That became worthless. So I made money on both of the expensive positions, taking the benefit of volatility crush. I still am long at 295, although that's a ways to go, on a call that really had very little in it. And I closed out my long put position, which was down at the 265. So net, I did a trade where the most I could lose was $10. I collected $6.50 of premium. I could have collected $8 of premium if I sold my call at the money, but because seasonality favored it going up, I sold my call $10 out of the money and bought one back 20 out of the money. Ended up selling it. I made 3 points, 3.5 points on the trade, and I'm still long. That's assuming that my long position goes to zero. So we'll see. I probably confused you all. I confused myself. All I know is you got to be careful when you watch after hours action, because I was certain I was going to have a maximum loss on this. And I woke up the next day, waited for the market to settle, turned out to be a nice little victory. It'll pay for my wife's annual purchases at Ulta Salon. What a leader in the retail space, and I guess we've now found a place that Amazon can't win, which is women's cosmetics. Because it's clearly one of the best looking of the retailers. Sally Beauty, not so much. I think this is a group that was pulled up by one thing. Now, if you don't know what straddles, strangles, condors, and the like are, you probably don't want to be trading them. But if this market goes sideways, if this market goes down, if this market goes up, there are option strategies that one can take that can be done with medium risk and sometimes 2 or 3 to 1 return. This trade I took was a maximum loss was $350, maximum gain was $650. I collected $6.50 of premium, and the biggest loss I could have had was $10, which meant the $650 plus another $350. If the stock had stayed without moving between 275 and 285, then I would have had max gain of $650. But I didn't keep that long call till it went to zero. I sold it when it was cheap, or excuse me, the short call, and that short call would be hurting me right now if I was still in it. So I played that one okay. If you don't know what I'm talking about, just disregard it, because options are a lot more complicated than stocks, and unless you know what they are, you don't want to be playing them. Lastly, semiconductor manufacturing, probably my chart of the year so far. Applied Materials, this is from March of 2016. Let's look at it. And to now, it's run from 17 to 38, lower left, upper right, tight as can be. It's a beautiful chart. So I want to point out a number of things. This here, that Eureka, was last year about this time when the market changed. And that was the highgrowthstockinvestor.com interpretation of the O'Neillian follow-through day. That's a buy signal on the market. I had a kahuna, a pocket pivot out of a squeeze. I probably would not have taken that trade yet because I was below the moving averages. Here, I gapped up above the 50, out of the squeeze. My weekly bongo turned green. That was a clear-cut buy signal. Here is another buy signal, a buyable gap up out of a kahuna. Now, you might be saying, Jeff, I would never have taken that trade. Notice it was kind of weak from left here, but I'm trying to get to where we are with this. I want to use this as a case study and move it forward. And the point I want to make is you have lots of opportunities to buy these stocks. All right, so here was a buy signal that we were just talking about. Bongo went green, gapped up out of a squeeze with the kahuna. Your next buy opportunity, and this is even a better looking opportunity, is this Bible gap up. Now, you may have thought at the time, I may have thought at the time, how can I buy a stock that just gapped up that much? My God, it's so high. It's moved up off of 15. It's a 50% return in 5 months. But notice we had a Bible gap up, mobile breakout, the weekly bongo went green. We were at a kahuna. Very strong signal. And that would have been a nice signal to take. We revisited again here. And notice what happened on the next day. We had Eurekas and Kahunas fired 2 days in a row. So here was another opportunity at 23 to go long. And we're still long at 23, and we're happy we were long at 23. And when's my, now I'm getting interested. So I may have gotten stopped out here. Plus I had a Phoenix in the market. I want to see if I have another chance to get in. Mobile breakout from a squeeze and a couple of kahunas. So I may not have gotten in because I had a weekly bongo red, but that would have been a place. Look at the volume picking up. Here's another pullback to the 50. So what's the lesson learned? In a strong stock, in an uptrending stock, pullbacks to the 50, especially when you move up off of it with momentum, can be great buying opportunities. When you see a confluence of long signals, a Eureka, which is a long signal for the market, a Kahuna, which is a momentum signal on the stock, a pocket pivot, a mobile breakout from a squeeze, and supported by a weekly bongo green, you have a number of reasons you should be long this stock. Lamb Research, another beautiful stock. Not quite as nice here. So those were the 10 groups that are the leaders. I did think this one here looked potential viable. Let me see if I can tell you why. Pull back, it's breaking above the 50 here. Here's why. It went to a weekly bongo green on Friday. I'd like to see a kahuna or something come in here, but Amacor might be one to start looking at. So what I do is I will do that same analysis without talking every night. Using that analysis, I identify long or short in the market, what industry groups are leading, where do I want to play. Then I will build a watch list. On Sunday, I take a much larger list of stocks and I build my watch list. So I started with a watch list today of about 500 stocks, and those were stocks that were from multiple different published lists, some of my own scans from TradeStation, and I ended up with, these were my buys. So let me make a couple comments about them. First of all, let's look at the industries. I'm between number 35 and 44. These are not all the same, okay? For example, AAOI is not buyable yet. It looks like it's going to pull back. It's been such a leader. It's got such great earnings per share. I'm going to look for a reversal. So I'm following it to look for a reversal. On the other hand, Broadcom, probably waiting for it to pull back before I buy it. I already have a position here. And then I have something like Marvell, which might be ready right now. Mobile breakup from a squeeze, pocket pivot and kahuna, great earnings per share growth. So there's various characteristics of these. So I got semiconductor, devices and manufacturing, specialty pharma, and biotech. And then I have a smattering of other stocks. You can stop it, take a picture if you like, and go look at what I look for. Then I take that buy watch and I break it down into various categories. A Bible gap up, I didn't find any that I liked today. A leaders extended or gone. Take a look at Tower Semi. It's interesting, earnings per share suck, but look at this run it's had, the power of the group. And the earnings per share are probably going to increase as the stock is turning around with earnings per share growth. Why did it make my list? I'd like to see something come in, but it's sitting right on the 17-day moving average. I have some stocks that are pullback waiting for a signal. So let's look at Pentair. All right. And what I mean by pullback waiting for a signal, it's just broke above the 200-day moving average. Everything is green. Mobile breakout from a squeeze, a pocket pivot, and a kahuna. That's probably a buy right there. I want to see confirmation. And so I'm going to watch this and see a gap up on Friday. On Monday might be enough. I see I've got the 200-day moving average on the weekly sitting at about 63. So what I might want to do is I might say, you know, there's going to be a lot of resistance here, but at least show me some momentum here on the next day, and I might be interested. So it's a pullback. I'm waiting for a signal, which will be more momentum coming in. On the other hand, I've got pullbacks ready to run. These guys are ready. Ready. Let's look at FMC, an agricultural chemicals play. Pull back to the 50, a kahuna, a mobile breakout from a squeeze. I'm going to buy this one on Monday. No, that's a bad thing to say. I'm going to think about buying this one on Monday, but I'm clearly concerned about the weekly bongo red. I think that will turn very quickly. But it's already got its buy signal. It's moved up off the 50. And then I've got a group that I call filtered buys. What a filtered buy is, let's go back here, are stocks that are specific on my my trade station. So let's go look at Restoration Hardware and let's look at FMC. So this is when I apply some of John's work. So Restoration Hardware and FMC. The only reason why these are messed up is because I just copied these from a different computer and they have different resolution. All right, so let's go to the longs. FMC. So I've got a high close doji on weekly and daily. I'm coming out of a squeeze on the daily with the mobile breakout and a PSA and a kahuna. I'm in a daily, weekly, and a bongo. A daily, and a monthly bongo. As I mentioned before in FMC, we haven't switched the weekly bongo yet. That's a little bothersome. I'm in a daily, weekly, and monthly on a PPS indicator, which is a person's buy signal. OBV has taken off, and I've got a brand new PPS buying signal on both the daily and the weekly. I've got 1, 2, 3, 4 momentums on the daily firing at the same time, and I've got a similar number. I got 1, 2, 2 daily, weekly momentums. I think this is a beautiful stock to buy. So this meets not only my HGSI standards, but all my person stuff. Then I look over at Restoration Hardware, and we see a stock that's already moved up, had a high close doji here. It's been in a buy now for a couple of weeks. It's had a big move up, but this stock has come down so much, let me tighten it up, that maybe it's something to look at. So you see it's come back from the 100 range. And the other thing to tell you about this stock is if you look at it on HGSI, it's got a lot of earnings coming in. And then we looked a few minutes ago, we talked about Clovis. And I like when my different worlds come together. Now Clovis is has a high closed doji. That's way too much. Had a high closed doji and a new PPS buy signal coming out of a squeeze. It's in a weekly sell, so that's one thing that I might find bothersome. But I'll look at the same signals across my different trading systems. And then lastly, I look for special situations. AT&T, do I love the chart? No, it's kind of okay. Yes, it had a pocket pivot off the 50. But what I really love is a 4.6% dividend. It's even better if you buy it down here, but looks like it wants to go higher. I like the dividend. And then the last group I characterize these stocks at is, one of the last is bottom fishing. So I might go back to one of my friends, Tech Resources. Yes, it's died. Yes, I've been in it for a long time. Yes, I have puts so that I've protected my downside. But as I look at this right now, I think it's getting ready to go higher. Look at the earnings per share growth. I wouldn't let it get below the 200-day moving average, but that's one that it's bottom fishing perhaps. And then the Restoration Hardware, which we looked at a few minutes ago. See how it popped up here? So everything is green there. And look at the earnings per share growth coming into the stock, which had been negative before. So I look at a lot of different things. I come up with my buy list. And then what I do, how can you trade so many stocks, Jeffrey? I can't trade that many stocks, although I do have been accused of running my own mutual fund. I drop them into TradeStation, into this lovely thing called Radar Screen. And what I'm able to do is scan a large number of stocks. Here's my buy list. And I could watch for changes in HCDs, daily signals, weekly signals. I could look for stocks that might be having pocket pivots, viable gap ups. I'll pick these up within an hour or two of the market opening. So a number of different things that I can do during the day to find the stocks that are working. On that note, I'm going to say goodbye. Sorry if I confused you with the options. I probably confused myself as well, which is why it's important to remember that options are risky. I'll put an asterisk about that. If you don't know options, they're horribly risky. But a lot of people like myself use options to take lower risk trades and to reduce some of my risk. Have a great day. Remember, this is not a week to do what John Person calls the Mexico trade, where you go all in and then you go to Mexico and forget about your portfolio. We got a lot of risk coming Wednesday. If she says 2 more rate increases and does only 25 basis points, says the economy is improving, but there's still risk to the downside, so they're going to wait for more data, the market may rip. But there's also a lot of risk that she'll do something and say 3 to 4 more increases, could surprise us with 50 basis points, and then we rip to the downside. When I'm that confused or that uncertain, I'm careful. That said, I think we may see a little bump the first couple days before we get into Wednesday. Have a great week, everybody. Sorry if this went wrong. Thank you, and good night.